There's a way to get a tax depreciation schedule that can cost you virtually nothing. Yes, it exists, and I'm about to reveal it. A common misconception people have when they're planning to get a tax depreciation schedule is that it'll cost an arm and a leg, even though that's not the case at all. This assumption has led to over 70% of Australians missing out on depreciation for their investment property each year, which is unfortunate because 2/3 of those investors could be pocketing thousands of dollars in savings every year. The cost of a depreciation schedule pays for itself. The reason? One schedule can last you up to 40 years and it's 100% tax deductible. In this video, I'll be sharing with you how much it costs to order a schedule, when is the best time to order it, and how much you could potentially save. Hi everyone, Kim here, back with another video to help you become a better property investor. To start, let's tackle what depreciation is. It's the wear and tear and loss in value of your property and its assets over time. This loss in value is what you can claim as a tax deduction in your tax return each year. After interest on loans, depreciation is the second biggest tax deduction claim you can make as an investor. Most importantly, it shows you how much those assets have depreciated and how much they can continue to depreciate. This will give you a clear idea of how much you can claim moving forward. A depreciation schedule outlines the value of your capital works and plant and equipment. So, how do you claim this depreciation? That's where a tax depreciation schedule comes in. It's a report prepared by a quantity surveyor, like us at Dual Tax, that outlines all the tax depreciation deductions you can claim on your property. Now, let's address the elephant in the room. Many investors think that getting a tax depreciation schedule is expensive, but in reality, it costs you nothing in the end. Let me break it down for you. First off, the cost of a depreciation schedule is 100% tax deductible. Yes, you heard that right. Not only does it pay for itself, but you can also claim the cost of the report itself. And it gets even better. A single depreciation schedule can last you up to 40 years. That's 4 decades of potential tax savings from one report. Our reports prepared for investors average at least 15 years of claims. That's 15 years of tax savings from a single report. And just like I said earlier, the cost of our report can also be claimed as a tax deduction. Timing is crucial when it comes to getting a tax depreciation schedule. If you want to maximize your benefits, it's best to organize the report before the 30th of June, which is the end of the financial year. This ensures you can claim the report fee of a tax depreciation schedule without having to wait until the next financial year. Now, you might be thinking, but what if my property is negatively geared? Is a depreciation schedule still worth it? And the answer to that is absolutely. In fact, it can help your negatively geared property yield a positive cash flow. Before we wrap this up, I want to emphasize that while all this information is valuable, it is in no way a substitute for professional advice. It's always best to consult a qualified accountant or tax agent for recommendations suited to your situation. If you want to dive deeper into the world of tax deductions, we have a video here on some of the ways you can reduce your investments taxes. And to make sure to hit that subscribe button and click on the notification bell. We're constantly creating videos like this to help you stay informed about the latest trends and investment strategies. See you in the next video.